Well, good morning, everyone. I'm Dr. Stock, and this video is for entertainment purposes only. You should know that I am twice the age I was half my life ago. Moving on from there, it is absolutely wonderful to be here and on YouTube with you guys, sharing the ideas that I have. I have some updates today on a couple of the companies that I've been covering more recently because I think that there's a lot of exciting news going on with them, and I think that there is, well, incredible opportunity. One of them has really taken off recently. Another one has really dropped recently. And then we got that one in the middle who hasn't really shown us a lot of excitement recently. So what the heck is going on there? So I want to talk about each of these three companies and to talk about what I see for them moving forward from here and what I think their future holds. So thank you guys for watching. Let's get ready to rock. All right, welcome back. I got my fall flannel on and I'm ready to go for this. I also have down in the description the link to my Patreon. You can click on that and go over there and join our community of investors that we have over there. They are just really awesome people that are passionate about investing. So if you would associate yourself with that kind of person, please come on over. We'd absolutely love to have you. Moo and Weeble, if you haven't signed up for accounts, you can do that. Sign up for those accounts, deposit your money, and then you get free stocks for that sign up. I get free stocks for the referral. Just a couple ways that you can support the channel. Now, some easier ways to support the channel. You can cover up your eyes and then mash around the screen. And then maybe you'll hit that like button, maybe hit the subscribe button, and maybe hit that notification bell. And, those would be absolutely wonderful ways. Also, watching this video all the way through also helps the algorithm that we have there. And also say hello in the comments. I'd love to hear from you. So thank you guys. And with that said, let's get on to the stocks. All right, sharing out my screen to you, and sharing is caring. What we're looking at right now is Draftkings. And you can see the recent, let's change that a little bit more. Oh, that's beautiful. So we're going to zoom in here. 42 is the low that it was at. We go all the way back to July 19th. So we're not quite at that level of bargain yet. We did recently run up to over $64 per share. So that, let me see, if we do 50% of 42, that's 21. 21 plus 42 is 63. That's a 50% run up from July until we got to the beginning of September, and we are already back down to $52 per share. Now, I think that we're going to find some pretty strong resistance around, pretty strong support around 51-ish dollars per share. You can see that I have that down here, and I have lines of support, but really can think of them more as areas of support. And I think that we have a little bit of room staying up in the low 50s for that support. And even if it does drop below, there's so many bullish things taking place for Draftkings. I think it's only a matter of time before we retake these support levels. I think we're going to retest them as resistance and then, be pushing back up through as we make that march higher from where we're at right now. If we zoom out more so that we're not looking at such a short time window, you can see, even if we go back, well, a really long way, back here for $30 per share, and then we had this low right here of like 35, another big low right here of 39, another big low of 42. We might have another big low sometime in the future. There's just going to be ongoing volatility with Draftkings because it is one of those high growth companies. And with high growth, you always have those feelings of, are they going to grow into the company we need them to be? For those of us who are long-term investors, and when we feel like they are, like when the Golden Nugget merger was announced, the Golden Nugget acquisition. Like when that Golden Nugget acquisition was announced, like when Simple Bet was announced, and then more recently when the ENTAIN acquisition was also, partnership or deal, I don't know what you want to call it, and I have an update on that one. When all that stuff was brought out, it brought in a lot of excitement. Now the ENTAIN thing was a little bit different because that did cause a bit of a sell-off because, it was a $20 billion deal made up of stock and cash, and so that's something that, they're tossing out some of their cash, which gives them less cash to work with, but they are getting a company out of it, or they would be, I should say. And then on top of that, the stock offerings that they have, that could lead to future share dilution, so that's something else that we would have to worry about as investors in this. However, so far, the ENTAIN deal did not go through. As a matter of fact, they rejected the Draftkings offer. So that's something to pay attention to there as well, that as of right now, nothing's really changed for Draftkings. Yeah, they made that offer. We already know that they're looking to make more acquisitions and mergers and partnerships to really consolidate a lot of what we have in the online sports betting space. And so for Draftkings going forward from here, expect that to continue to happen time and time again because they want to control as much of the market as they can, and that's why they're in the leadership position that they are, and they are aggressive. They do advertise aggressively, and they are after as many users, especially active users, that they can get, and trying to bring more into the fold all the time. And their tenacity is one of the reasons why I believe in them as the market leaders that they are, and that's why I invest with them. So for DraftKings, right now, the average analyst estimate on this is around like $74 per share, and we're currently trading at $52 per share, so that's $22 up. So we're around that like 40% mark, 40% upside over the next 12 months for DraftKings right now. And so 40% to me sounds pretty good, and we've already seen that it's capable of those prices. And so far, even though it's come down off those highs every time, for instance, if you look at our peaks that we have, we already looked at the valleys, but if you look at the peaks, 74 down to 64, this could be a very, very long-term wedge that we have playing out, and I think it's going to work out very well for DraftKings. The NFL season, I think we want to watch that happen through Q3 reports, through Q4 reports for the end of 2021, and listen to what is said about them and watch how many people have used their platform and how much they've spent on their platform. I think it's going to be a really good year for revenue, especially Q4. I think, well, the ends of Q3 and all throughout Q4, I think it's going to be incredible for DraftKings. So I'm really excited about that. I'm really excited about their acquisition of Golden Nugget, which takes place in the first quarter of 2021. Also their partnership with SimpleBet. So I better move on from here. But DraftKings, I still think there's incredible opportunity. I thought that there was around $60. I think there's even more so at the, well, where we closed yesterday at about $52, $53 per share. All right, let's move on from there. Our friends SoFi, I've talked about this recently, and they have their banking charter that we're waiting on. There we go, and we can check out the recent price action that they've had. They're slowly kind of climbing up out of the gutter from around $13-ish per share, and slowly they come up to here around low 14s, and then about, let me see, this next one we have is high 14s, and we did manage to close above it, but check out, can you guys see that we came up when we smooched that 50-day simple moving average, this blue curve that I have coming through here? That's been acting as pretty good resistance so far. So that could continue to serve as resistance for us. However, we want to look at the pre-market hours. So right now, that blue line is, let me see where the high price was yesterday. High price was 15.28. And if we go into the pre-market hours on SoFi, you can see we're already up above that. Now, this is low volume. We don't know that it's going to stay, but we got a bit of excitement here because overnight, there we go, Jefferies initiated a price target of $25 per share for SoFi. So this is so new, it hasn't hit tip ranks yet, and I don't even think it has made it into the analyst estimates that we see here yet. Right now it says 4, but this makes the 5th analyst estimate that we have. And the nice thing is, it was something I mentioned that I like to see when I was doing my live streams over the summertime, is that I like to see this current price here to be below the low analyst price target that we have. Now here it says 1650, so you know that's something to keep an eye on. We're at 15 right now, so we have another 10% upside from yesterday's close to get us up to that 1650. Not great, but then when you look at the average analyst estimate and the fact that we just got 25, which again puts us around here, which makes that average even stronger of an average that we have, a little bit more solid around that middle of $25 per share, that still gives us, let me see, 10 more dollars would be a 66-ish% upside from where we closed yesterday for SoFi over the next 12 months. When we hit that banking charter, that is going to ignite the price. So that's something that we definitely want to pay attention to. And, you know, some people are taking options. I took some option plays, banking on that banking charter coming out sometime soon. It's only a small amount of cash. It is definitely a risk, and that time value will erode quickly. So those are things to me that I'm aware of for those plays. But if we should get that news sometime within 2021, I think that we're going to be sitting in some good shape as that time goes on. And if we don't get those banking charters, I might throw a little bit more cash out there in order to try and keep tabs on it and try and take advantage of some rampant price action with some out of the money call options. So those are just some things that I think about for right now. Let's go on from there to our friend Lucid. And Lucid and the after hours yesterday got a price target upgrade from $25 per share up to $35 per share. So that was by CFRA. And let me see over here. There we go. CFRA hikes its target for Lucid Group shares by 40% as the stock's bull run shows no sign of slowing down. They say it doesn't show a sign of slowing down. However, we are getting closer and closer to that production preview week that takes place starting on Monday of next week, so September the 27th. We also have overall market bias to pay attention to, although on the big sell-off day, Lucid didn't seem to care. It seemed like the trading happened anyway. And so this is one I was considering an options play because I knew that we would have a little bit of volatility coming up and we'd probably have some upward pressure in anticipation of production week. That one went from just a few cents. It was like around 10 or 11 cents, I believe, when I was considering it, and I never pulled the trigger on it. And more recently, because of the price action, that was for a $25 strike price, and now it's up over 27. So not only would it have had the time value, so the extrinsic value in the option, but it also now has significant intrinsic value in the option because it's now very comfortably in the money from where it was when I first looked at it. And honestly, I would have cut my gains at about 6.5 times because I thought that it was about done running. I thought that it really had run up. And by the last time I looked, it was like 26 times where I would have had for my initial investment. I never would have held on that long because I would have been trading the option, but it was just, something that I would watch for those into opportunities to come along. And I'm sad I missed this one, but if I spend time dwelling on that one, I'm going to miss the other opportunities that come along. So let's take a look at Lucid. On this chart here, you can see it's peaking out just under $28 per share. Even in the pre-market, we're still hitting about where it's at right now. They said no signs of slowing down. However, when we look at the daily chart, I wouldn't be surprised if it does slow down in the near term. So if we go right across the top of yesterday's candle, that puts us right across about those 3 highs that we had before, and we peaked out just under $30 per share before. And if we go down to the body of the candle from where it opened, 29, and so we're getting close to that. I think that we are going to have signs of slowing down pretty soon. I think we're going to have some profit taking, but this is excellent volume that we have right now, and I think that we're going to have a pullback possibly to that $25 mark, maybe even down here as far as 22 in the near future as that production week comes around. Now, if we get solid production news, we're in good shape. It is noteworthy that they have an order for, they registered 10,000 VIN numbers for the Lucid Air model. I think that may have been in the headline. No, it wasn't in the headline. It's down here. Right here in the bottom paragraph of the article that I shared earlier, it says, we noted earlier this week that Lucid Group appears to have registered around 10,000 vehicle identification numbers, so VIN numbers corresponding to the roughly 10,000 reservations for the Lucid Air EV. So it's going to be interesting to watch the production start. I think that's going to be good news. So even if we get profit taking now and it comes back down for us, if it settles for us, that's a good thing after a run up like this one. It's healthy for the stock, and we would like slow, steady growth rather than this rampant growth for at least long-term investing. So please keep that in mind. And I do have a long-term position in Lucid. As a matter of fact, I have long-term positions in everything that you see in this video. So other things to keep in mind for disclosure purposes. So production news is going to be big. And then also order news showing demand for their vehicles is also going to be big. And then watching how they scale that up over time and how soon they reach profitability. So we have a lot of things going for Lucid, and I think it's going to be exciting to watch as they hit production, as Lucid start hitting the road, and we start to see more reviews come out for Lucid Air and the Lucid Air Dream Edition. Not to mention, I should mention that that 520-mile range that they got rated at being 25% over Tesla's 408 miles per charge that they have. That was also incredibly good news for Lucid and definitely helped to move that stock price. So let me summarize. Draftkings, I think there's a lot of opportunity there, especially with that recent drop that we had that took us down below the 200-day and the 50-day. And I think that's going to be very temporary for us now with the overall market bias, with a debt ceiling that's looming over us, interest rates coming out from the Fed, possible tapering, the Evergrande going on in China. There's a lot going on right now that could rock the entire market. And if that happens and pushes us down below the $50 mark, for me, I purposely build up my cash position in order to take advantage of things like that happening. So I rebalanced my portfolio, had some cash ready to go, and now as I watch the next few weeks play out, I think the debt ceiling thing is going to get resolved. I think there's going to be some pain on the way getting there, and we'll watch what happens in the markets in the meantime. SoFi, watching for the news for that banking charter. Any little scrap of evidence that we get, especially the more solid that evidence, the more likely it is to jump that price. If it comes out and like, hey, we got our banking charter, that's going to be an incredible day. From right now, where we're at, sitting at just over $15 per share for SoFi as of yesterday's close, I could see easily 50% jump going from where they're currently at. And then finally, Lucid. I think Lucid's going to pull back in the near term. However, I wouldn't be surprised to see us come out and reach that $30 mark when we get into production, when we start seeing them being sold end of 2021. I was saying mid 25s, possibly to 30, and we'll watch as we get into 2022 if we hit that $30 to $35 range, if that excitement for Lucid pans out, that people are craving that exposure. So those are things that we're going to have to watch for. Thank you guys for watching this. I really appreciate it. Always love to have you here. Eyes wide open this time. Hit the like button, subscribe button, and notification bell. And that Patreon, come over and join us. We'd love to have you. Moo Weeble, sign up, deposit your money, get free stocks, and thank you for the free stocks. And if nothing else, thank you for watching this video all the way through. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.